Hey, guys, it's your boy, Mr. Luke Evan Brooks. Welcome again to another edition of me, Luke Brooks. I'm about to say Passive Income Central, but we're retired at. Now, if you're new to the channel, please don't forget to go ahead and subscribe. It's very essential that you do that. That helps me grow this channel where I get the message out and YouTube looks at that, right? It's very important that we do that. So I am going to get to the point. This might be a short one because they might get me here. Why banks ain't worth yeah, seriously, like it's a good question. And I don't know if y'all been through this or not, but I have, right? So I told you in the past I made some mistakes. I had some failures or whatnot. And I'm in the process of clearing a lot of stuff when it comes to loans and stuff, right? They're on their way of clearing it, right? Sorry about that, guys. I got something down below. Uh anyway, dealing with that, right? Dealing with the nonsense of that. Credit scores have been playing funny with everyone. So what's been going on with most of these banks is that they're trying to avoid risk because a lot of folks they're in debt ain't paying their debt. So the banks have to figure out how to get rid of that debt, right? So what happens at the end of the day is something like this. They lower the amount of credit that they give to you. And to me, a lot of folks are like, oh, but they do that because it's a thing to hedge off against risk. They don't want someone who has a $20,000 credit card or 50,000 credit card to turn around and say, well, I can't pay that now. I'm going to bankruptcy. Because they will probably get cleared for bankruptcy, but the companies can't cash in on the crap that they got, right? It's not like a car or a house. So with that in mind, when this takes place, they hit everyone. They just don't hit one person. They go across the whole board. Say, hey, if you meet this threshold, if you hit this certain credit score, we're going to lower it down. And it's just trigger points. So for me, they did trigger points on me. But, you know, it's one thing in fact, if you not miss any payments, any at all, that should be taken into account. Say, hey, he didn't miss any payments. He's been able to hold up on everything. And then at the end of the day, you have additional things that come into play, the age per credit, right? All those things. Well, these credit card companies say bump all that. We're not going to do that, and it's so ironic, right? Because the United States is in $38 trillion in debt by the banks, right? Everyone but the banks issuing out the money. Federal Reserve issuing out money, right? And I'm not going to go down that rabbit hole right there because that'll be another YouTube video to talk about that mess. But if you're fiscally responsible, right? I know people say, well, you shouldn't have all those loans. It don't matter, right? If you're paying them off, you never miss anything. That should be something taken consideration. But these banks are not issuing out money. And it's so funny, right? They're increasing interest rates, right? And they said they're going to hold, but I think they're going to increase some more because they're trying to hedge off inflation, or they're trying to hedge off having a recession, but we having an inflation, which is like, I'm gonna shoot my left foot so my right foot won't catch it. Let's go. And at the end of the day, you're like, wait a minute, what? Like, you're gonna hurt yourself regardless. But with the banks now, you're not talking about it, but they're probably gonna get called in pretty soon for some of the stuff they've been doing, some illegal practices. Now, there's certain people who might say, well, no, they're not gonna do that, but they are. The other thing that I hate too is some of these third-party lenders, they say we're quick to give you a loan with an exorbitant amount of interest. Instead of it being like a 19% or 20%, 22%, some of them are talking about 30, 33%, 35%, which is so ridiculous, right? If I was to borrow $1 from you, I have to give you 30 cents, right? That's 30 cents out of that dollar, 35 cents out of that dollar. I think that's ridiculous. And a lot of people falling for it. I used to fall for stuff like that, and I had to put my foot down. I told myself at the end of the day, we got to stop being a victim, because that's what we are. If we take their money, we're a victim. Now, some people might say, well, how do I supposed to pay my bills? How am I supposed to do that? That's when you talk to not your debt management Well, no, they are. It's debt management. It's you got debt consolidation, you got debt management, then you got these debt lenders, right? Where you have a debt management team, which is usually supposed to be free, doesn't cost you anything, a nonprofit, and they will reach out on your behalf, talk to your lenders to see if they reduce the rate, see what they can negotiate. Say, hey, you're gonna get your money back, but you're not gonna get all the interest. Are you willing to settle for this for the interest rate? And they might say, yeah, but you can't use the credit cards while you're on this program, which that's a good thing. That's how I look at it. It's a good thing. Where you got other guys that say, hey, don't pay them anything. Now this can backfire. Those are like your debt consolidation guys, where or no, debt settlement. That's what they call debt settlement. I'm sorry. Long day. So with the debt settlement team, they basically turn around and they will tell you not to pay your bills for 6 months. Now you're gonna start getting phone calls. God forbid they get the phone number to your job and say this person ain't been paying a bill, blah blah blah. It's gonna destroy your credit, right? So then they step in because you've been building up this escrow. They step in and then they turn around and talk to those guys and say, hey guys, we got the money. You want some? They call all of them. You want some? Well, we're not gonna give you this. We're gonna give you that. Now they say it's quicker, but also what they put on the back end because they ask every time, do you have a security clearance? Yeah. Well, it still works. I said, no, why you ask if I have a security clearance? Because these companies could turn around and say, we're not doing it. We're just gonna take your ass to court. And then if you having issues with your money, that can actually mess up your security clearance at the end of the day. So when you hear that, it's just like, no, we're not doing that. To me, I think that's shady because at the end, these credit card companies be like, okay, you can't pay it. We take this. We're gonna take a loss. We're gonna fill out a tax form saying you took those gifts, all the stuff you bought, and now you got to deal with the IRS. Now the funny thing, the debt settlement team are not gonna handle that tax portion, so you might be paying taxes out your ass, of course. And then you got debt consolidation. These are the ones that are gonna keep calling your phone. So for me, the banks have been like, our hands are tied. Our traditional banks are saying their hands are tied. They can't help the person, the everyday worker, but they'll let these other guys, because think about where they're getting the money from. You got to think about where most of these other lenders are getting money from. They're getting it from those same banks, which is stupid because they say, hey, you give me the money, loan it to me. I'm going to turn around, loan it to this person. They're going to charge an extra rate. They're going to pay back the bank, the original bank, because these people don't got banks. I will tell you that right now. I throw them in the trash can. And it's going to come to an end game because people are not going to sit here and keep paying for all the stuff that they're seeing, right? All this debt, this stuff is coming to an end. I'm hearing now people turning in cars. Come get the damn car, they saying. Come get it. I don't want it. I don't want it. And back in the day, 20 years ago, I saw a girl crying, jumped on the car. She didn't want her car to be repossessed. Now people are like, here's the key. Take it. Yay, party. I don't got to pay you no more. In the bank store, you got to pay something. I don't have anything. What are you going to take from me? I have nothing. Only thing I had was that car, and you got it. And it's getting to a point now, it's just getting tighter and tighter and tighter. And it's got to be some type of adjustment. But to me, I think the banks knew this. They kind of did like 2008, right? When we had a housing crisis. You're lending money to people who can't pay their stuff off. You're giving them everything will be okay. Get more money when you know they're not fiscally responsible for paying off the debts. They don't show any sign. They've been making multiple misses on their payments. So it goes back. It's just like a boomerang. You throw it out there, it's gonna come back there and hit you back. Okay. So guys, let me know what you think. You think I was hitting on something? Do you think banks ain't worth? Shh. Let me know. Tell me what your experience is. If you like what we just did, go ahead, like, share, and subscribe. Again, my name is Mr. Luke Kevin Brooks. I will catch you on the other side. Take care, guys.